guys, welcome back to another week of Mortgage Matters in Minutes here, sponsored by Mortgage Specialists. I'm Brent Rasmussen, again, your host this week, to cover why the lowest interest rate isn't always the best option for you. Obviously, our goal for every consumer and every borrower out there in the market is to find you the best loan product, and usually consumers think the best interest rates for you. But we're here to always give you the facts, give you the education to let you make the best decision on your behalf. So why isn't the lowest rate always the best option for you? The easiest answer I can give you right out of the gate here is many of our online lenders may give you a cheaper interest rate that you feel is lower than other local competitors. But what we also find much of the time is that they're going to charge excessive or extra closing costs in order to offset that interest rate. And so are you really saving on the loan transaction if the closing costs are $10,000 when maybe normally they should be $2,000 to $3,000? So it's not always that the lowest interest rate gives you the best loan product that's out there. We run into this often in regards to consumers that are shopping around and they don't maybe know what to shop for, and obviously the lowest price or lowest interest rate is what consumers are going to pick. Just when you go to get a bid for maybe finishing your basement or adding on to your house, you don't usually look for the highest offer or highest bidder, but if that higher bidder or higher offer comes with maybe a better process, more customer service, more education of how to do the project properly and correct, the price isn't always what is most advantageous to you and your family. And I can tell you some of the big box lenders, some of the online lenders do this game. And we see this happen often and all the time. Consumers are calling around and saying, I called just to get a rate quote. It's not as easy as just calling and saying, what's the going rate today? There's tons that go into what their interest rate is, your loan product, your credit score, your down payment, your loan amount, maybe your DTI. Different variables are going to factor into what the actual interest rate is for you. So let's break this down a little bit further in regards to why maybe the interest rate, the lowest one, isn't for you. And I can assure you that I see this regularly among competitors and among borrowers shopping around. They would assume that every individual has the same knowledge, experience, and education about the market. So if everybody is equal, and then at that point in time, if you're looking for the lowest interest rates, you are comparing apples to apples. But most industry professionals don't have the same knowledge, experience, education of what it takes to get your mortgage done at the beginning all the way through the end to give you the least amount of stress, least amount of effort in providing forth that mortgage loan. And while I know no one wants to take a 0.5% higher interest rate or a 0.25% higher interest rate or a 1% higher interest rate to get this level of service, I can assure you many times the rates are comparable and nearly equal among individuals, but to look for the extra deliverables and the process and the customer service they also provide. Let's back up and take this one more step further. What do you do for work? What do you do for a living? Are you a doctor, a lawyer? Let's break it down. Are you a teacher? Are you a framer, a plumber, electrician? Are you a marketer? Are you a programmer? Are you a networker? What do you do for work? So could your employer possibly find someone cheaper to replace you with? Of course they could. Obviously, it's super hard in this market right now to find any employees, but could they find someone cheaper to replace you with? Yes, they could. But is that person necessarily that's cheaper going to do the same level of work or same experience or same quality that you provide? Probably not. You get what you pay for a reason. You get what's brought to you and you pay for that service because you expect that individual to have gone through the process, to have done what you are hiring them to do, and they are giving you the best advice as a professional. One quote that I find is very great that we've been chatting about through the years is the best rate with the wrong strategy is much more expensive than a competitive rate with a certified mortgage advisor. We are certified mortgage advisors. We know how the market will affect your interest rate. We know what the markets possibly can do in the future. We have an understanding of how the markets affect you and when to lock in your interest rate, when not to lock in your interest rate, and when to look at the market variables to see what's going to happen in the future for you. So again, the cheapest interest rate isn't and the lowest interest rate isn't always your best option. It's hard to make comparisons among mortgage lenders and mortgage lenders, and we completely understand that. But if we look at the entire whole and comparing all closing costs, all knowledge, experience, and market understandings, obviously that is how we want to look at getting qualified or getting your quote for the next professional or the next company that's going to do your mortgage. So in closing, the best rate with a wrong strategy is much more expensive than the competitive rate with a certified mortgage advisor. Again, here at Mortgage Specialists, if you have any questions, feel free to reach out to us at 402-991-5153. Or you can check out any of our blogs or information or education on our website at mtg-specialist.com. Look forward to seeing you guys next week here at 3 p.m. Check in for each week of education here at Mortgage Specialists. I hope you all have a great rest of your week. We'll see you next time. Mortgage Specialists. Driven, trusted, reliable.